They're not supposed to talk about it, not on air, not in public, not where the average investor can hear it. But one slip, one smirk, was all it took to ignite the biggest conversation in the XRP community since the SEC case. Because apparently, someone out there might actually know the XRP surge date. And tonight, we're breaking it down. What he said, what he didn't say, and what it means for you before the next liquidity switch flips. This isn't one of those recycled hype loops you've been seeing for months. This goes deeper into why the macro timing, the institutional corridors, and the US debt spiral are quietly aligning around a single narrative, XRP, as the bridge asset for the next financial cycle. Now, the clip everyone's talking about. It's Jake Claver, the same guy who's been warning for over a year and a half that XRP's supply shock would hit before regulation finalizes. He was asked directly if he knows something the public doesn't. He froze for half a second, smiled, and skipped the question. And the internet exploded. The truth is, whether Jake actually knows a date or not doesn't even matter, because the structure of what's happening is bigger than any one insider. Every data point, every acquisition, every regulatory headline is pointing toward the same convergence window. And when you zoom out, you realize that this isn't about hype, it's about sequence. Every financial transition in history follows the same playbook. First they deny, then they regulate, then they integrate. Right now, we're at that final stage. Integration. Ripple's locking in treasury systems, government partnerships, and private liquidity hubs. BlackRock's experimenting with tokenized collateral. And central banks are testing settlement layers that look suspiciously familiar to what XRP was designed for over a decade ago. So if you're sitting there wondering whether Jake Claver just leaked the timeline, understand this: he didn't have to. The system itself is already showing its hand. And before we go deeper, let me make this crystal clear. This is not financial advice. Always do your own research. But if what's coming plays out the way the data suggests, then the next few months won't just be about XRP's price, they'll redefine how global liquidity moves forever. Now, grab your coffee, drop a matrix ready in the comments if you're still positioned, and let's break down why this moment could be the real beginning of the XRP revaluation timeline. All right, let's get into the meat of it. Because what Jake Claver hinted at wasn't just another price prediction. It was a signal, the kind you only catch if you understand how liquidity behaves before a major revaluation event. You see, the way the XRP ecosystem is evolving right now mirrors what we've seen before in every major monetary transition. First comes accumulation, then compression, and finally, release. That release is what most people call a pump, but to the insiders, the ones positioning capital, not chasing hype, it's called liquidity repricing. So when Jake was asked if he knew something about XRP's timeline, he didn't answer with words, he answered with context, because the context is screaming louder than any official statement ever could. Let's start with what's really happening behind the scenes. Over the last several months, exchange liquidity has been draining at record pace. Wallet analysis shows major amounts of XRP moving off exchange into cold storage, custody solutions, and institutional wallets that don't participate in daily market trading. At the same time, Ripple's enterprise partners, companies like G-Treasury, Standard Custody, and now Ripple Prime, have been integrating settlement solutions that use the XRP ledger as a backbone for cross-border value transfer. That combination, retail supply moving off exchanges and institutional infrastructure quietly going live, is the exact setup for a controlled liquidity event. Here's why that matters. Markets move on supply and demand, but revaluation events happen when those two forces are completely misaligned. If demand spikes while supply is locked in institutional systems, the market doesn't just go up, it snaps upward. Violently, unpredictably, and fast. That's why Jake called this the calm before the biggest move in XRP history. And make no mistake, this is no coincidence. For over 18 months, he's been saying the same thing. XRP's supply shock isn't theoretical, it's engineered. Every acquisition, every partnership, every line of code Ripple adds to its network is creating less tradable XRP and more utility-bound XRP. Tokens locked inside payment corridors, liquidity hubs, and bridge settlements. Think of it like this. If Bitcoin is digital gold, XRP is digital oil, and the world's largest refineries are quietly claiming their barrels before the price explosion. Now, Jake's theory gets even deeper when he ties this to macroeconomics. He says the US government, and possibly other major economies, may already be holding digital assets like XRP as unaccounted collateral on their balance sheets. That sounds wild at first, until you realize the logic. Governments are drowning in debt. They can't just print endlessly anymore. Inflation made that playbook unsustainable. So how do you rebalance the books without triggering a collapse? You introduce new forms of value, digital collateral that can absorb debt while creating liquidity. In other words, instead of selling treasuries, they tokenize them. Instead of printing cash, they unlock liquidity from assets already in the system. And that's where XRP fits in. Because XRP isn't just a currency. It's a bridge asset, a universal liquidity layer that connects every other asset class. If governments or their strategic partners hold it, whether directly or through intermediaries like BlackRock or Fidelity, they suddenly have a digital instrument that can move and reprice liquidity in real time. Now imagine this scenario Jake described. The US quietly holds billions in XRP through proxies, not for speculation but for monetary restructuring. They don't announce it. They don't need to. They simply integrate it into the new digital financial plumbing, the same plumbing Ripple has been building for years. And when the time comes to rebalance debt or back new digital treasuries, they don't manually revalue XRP. The market does it for them, organically, through liquidity flow. It's supply versus demand, multiplied by institutional volume. That's the beauty of this theory. It doesn't require a decree. It just requires the architecture. And that architecture already exists. Ripple's network is connected to hundreds of financial institutions. Central banks are running pilot programs for tokenized payments. And we now know that US regulators are drafting frameworks for digital collateral accounting, meaning assets like XRP could soon be recognized as eligible balance sheet liquidity for banks. When that happens, it's not just bullish, it's transformational. It moves XRP from speculative crypto asset to monetary infrastructure. And that's when the price stops being a meme and starts reflecting its true velocity and volume potential. But there's another layer, the psychology of suppression. Every great revaluation is preceded by apathy, disbelief, and exhaustion. The insiders want the retail market asleep. They want the mainstream to think nothing's happening. Because that's when positioning is easiest. You can see it everywhere. Influencers burn out, Twitter quiet, volume flat. Meanwhile, Ripple keeps acquiring, building, and locking in global corridors. They're not talking, they're executing. And Jake's smirk, it's not arrogance, it's awareness. He sees the pieces, he knows the alignment, he just can't say it out loud. Because if you reveal the end game too soon, the game changes. Now let's talk numbers, because the math here is stunning. Jake used an example. If XRP moves from $2.50 to $2,000, that's roughly a 700 times increase. People laugh at that until they realize it's not based on speculation. It's based on debt coverage ratios. If global digital collateral needs reach just a fraction of global debt obligations, even 1%, XRP's liquidity value could skyrocket into the trillions. You're not just talking about new wealth. You're talking about systemic repricing of value. And that's why when he says the government won't need to revalue it manually, it hits differently. Because the infrastructure is already engineered for an automated repricing. When demand outpaces available supply and settlement corridors expand globally, XRP's market price adjusts naturally, not through hype, but through necessity. That's the real surge date. It's not a day on the calendar, it's the moment the math and mechanics converge. When the liquidity threshold breaks and institutions are forced to settle digitally. We're not waiting for a pump. We're waiting for activation. And when that activation happens, whether it's triggered by a global liquidity event, a major partnership announcement, or the quiet go-live of Ripple's treasury network, the move won't be gradual. It'll be a cascade. That's why the ones who know don't need to say it. They're already positioned, they're already connected to the corridors, they're already accumulating while everyone else is distracted by short-term noise. This is what Jake meant when he said, "I wouldn't keep repeating the same prediction for 18 months unless it was aligned." Because conviction isn't about guessing, it's about understanding the architecture of inevitability. So as you watch the charts go quiet, as the influencers pivot, and as the headlines fade, remember this: when liquidity dries up, that's not the end. That's the inhale before the exhale. And when this market breathes out again, it won't just move. It'll reprice reality itself. So here we are, the edge of the new financial frontier. You've heard the rumors, seen the data, and felt the silence before the storm. Let's be honest, this isn't about hype anymore. It's about sequence, design, and inevitability. While retail traders stare at the same red candles and influencers chase the next headline, the world's most powerful institutions are quietly locking in their positions. Banks are connecting to RippleNet, governments are drafting digital asset collateral laws, And custodians like Standard Custody and G Treasury are integrating XRP deep into their systems, not as a speculative token, but as infrastructure. That's why the real question isn't if XRP will reprice. It's when the liquidity switch flips. And when it does, it won't be a chart pattern or a tweet that triggers it. It'll be the quiet, mechanical click of a system that's been built in silence for over a decade finally going live. This is what Jake Claver and every serious analyst have been hinting at. A monetary transformation hiding in plain sight. When institutions move, they don't announce. They execute. And when the corridors flood open, it'll already be too late to get in early. So here's my message to you. If this video opened your eyes, or maybe even punched you in the gut a little, good. That's the point. Because conviction doesn't come from comfort, it comes from clarity. You're watching the early chapters of a liquidity revolution, the moment where blockchain stops being speculation and becomes the bloodstream of the global economy. The question is, when the switch flips, will you already be in position? Drop a matrix ready in the comments if you are. Stay focused, stay sharp, and never forget, we're not chasing hype here. We're documenting history in real time. This is Matrix Millionaire, signing off. The future's already written. Now it's just waiting to be activated.